So you may have noticed something's going on with the stock market. Ever since Liberation Day, which President Donald Trump announced last week, the stock market has been in a bit of a frenzy. Actually, it's gone down quite a bit, dropping over $1,000 in the S&P 500 and potentially struggling even more in the Dow Jones Index. Now, this can be scary. There's a lot of terrifying headlines out there that are telling you to panic, to be afraid. Prices are going to go up. People's jobs are going to be lost. Everything's lost. I'm here to tell you it's okay, be calm. But there are a few ways that you should react and you should handle this situation. So let's go over 5 different tips that you can do to handle this stock market mini crash and understand and handle the tariffs. Number 1 is very important, and that is to not panic. There's a lot of headlines out there that make it seem like we're in for the next depression. I've seen headlines that say tariffs cause great economic depressions, and when we look at the 1930s Great Depression of the United States, this was one of the worst depressions that we've seen in hundreds of years. There's a very small possibility that we're actually going to get to that point. In fact, we may see something like a mini recession. Maybe, that's a guess, it's hard to say, but if we do, those recessions only last maybe a few months, maybe 18 months. However, a depression means unstable employment. The Great Depression even had around 25% unemployment. Right now we're at 4.2%. To think that these tariffs will cause something like a 21% increase in unemployment is a little bit ridiculous. Now, I'm not saying that the stock market dropping as much as it did over the last few days is a good thing. It is scary, and some people are looking at their retirement accounts and seeing that number go down and down and down. They're seeing a lot of red in their retirement accounts, and that's difficult. For people ages below 50 or even 55, I wouldn't worry at all. The stock market is going to recover within the next few months, if at worst, the next year or two. For those who are closer to retirement, still don't panic. If you can, keep working. If you can't, it's totally understandable. We don't want to seem insensitive to those who are just about on the age of retirement, but it is important to remember that if you can continue to work, that's a great option. If not, making sure that you're doing a good job with your budget and not overspending above your means until the stock market and your 401k or IRA goes back up. For those who are in retirement, try to stick to the 4% rule, which means you only take out about 4% of your retirement each year. Whatever's in your 401k or IRA, only take out 4%. If you do that, you'll probably be able to make up the rest of the money with compound interest, growth stocks, dividends, what have you. So yes, it is difficult to look at the stock market every day and see that these numbers are going down and it seems like it's doomsday, but I promise you it's not. Number 2 is an important one, and it's important that when you look at the stock market, you see that prices are down. If you can invest more, do so. This means if you've been waiting for a time to put a little bit more money into the stock market, this is a good opportunity to do so. You may have seen headlines saying something about $6 trillion in wealth has been evaporated from the stock market. And while that is true, likely a lot of that $6 trillion isn't money from people like you or me, our portfolios. Instead, it's from Wall Street traders, big investors who already have millions or billions of dollars. We only make up a small portion of the stock market or a small portion of the ownership of a lot of these companies. Instead, it's a lot of billionaires and millionaires. Now, there's nothing wrong with that. They went about their time to make that money to buy those stocks, but instead of holding on to those stocks, they said, I'm going to sell it. And as the prices went down, they said, I'm going to sell more. The more stock traders sell, the more investors sell, the lower the stock price, which means regular people have a good opportunity to get into the stock market for a discounted price. It's very important that you understand if you cannot afford to get into the stock market, then you shouldn't do so. FOMO is a real thing. Fear of missing out of these low stock prices is a real thing, and stock prices could still go down more. So if you invest today, especially if you don't have the money, and you see, Bradley, what happened in 2 weeks? The stock market went down even more. I couldn't afford to invest. Then you made a mistake. So if you can, invest a little bit more today, and then in a few months you'll see, oh great, I bought some stocks at a discount. Number 3 is a very important one. one, and that is do not panic sell. Right now, Wall Street traders, millionaires, billionaires, owners of businesses, investors, shareholders are selling off their stock. They're doing exactly what I'm telling you not to do. Do not panic sell. Behavioral finance shows those who try to sell and buy and time the market struggle the most and lose a lot of their money and profit. If you sell right now, you're likely losing out on some of your profit and locking in losses. Now, if you have to sell for an individual account because you need some money, fine, you can do whatever you need. But don't start making bad decisions with your 401k and IRA and selling because you're afraid of the stock market. You could be hit with penalties, with fees, with taxes because you're selling too early in the stock market before you've hit that age of 59 and a half. If you're over 59 and a half, like I said before, try not to panic. But if you have to sell because you need some cash for your retirement, that makes sense. You have to sell regardless, so do so. So don't panic sell. Keep your money there. If you can, like I said before, try to buy some more if you can afford to do so. And for number 4, try to evaluate your budget. Try to evaluate your savings, how much money you're spending and how much money you're saving, and try to evaluate your job situation. It can be scary when we see headlines of tariffs, of increase of prices falling and not truly understanding. So try to take some time and look at your budget. At Freedom Finances, we do have a starter budget. We have a debt calculator. These tools are available to you so that way you can look at your budget and see, am I spending my money the right way? Am I saving my money the right way? Am I taking advantage of paying off my debt as soon as possible? If you can answer these questions and you really understand where you are and you feel comfortable for yourself, for your friends, for your family, then you'll be in a much better position and not have to worry about all these things about tariffs, about the stock market. It's really about personal control and personal finances. So take some time, evaluate your budget, evaluate your debt, look at your job situation. If you're thinking about quitting, maybe pause for now just in case there is some sort of economic crisis. However, right now there is no economic crisis. And finally, tip 5, take some time to pause and get away from fearful headlines. It's the people's jobs at Fox, at ABC, at NBC, what have you. It's their job to tell us about the news, and a lot of the news is leaning negative. However, it's also their job to bring in more clicks, to bring in more views. Instead of being afraid, maybe stop looking at those headlines for a couple days. If you can take care of yourself, your personal finances, keep your job in order, look at your budget, then you don't have to look at the news every day and see all these terrifying things about the stock market, about your 401k, at your IRA. Make some evaluations for yourself. If you are someone like me who loves to read the news all the time, then just make sure that you're thinking independently and understanding that some of these organizations have bias, political bias, or they're simply trying to bring you in so that way you'll read their news more often. Much of the news is slanted negatively right now, and that could be some political bias, and some of it is honesty, and some of it is economic understanding. Some of it slants positive, and some of that's honest, and some of that's based on facts and data. But a lot of this news is pretty divisive, so don't freak out. Instead, you can follow our daily finance news, which we just started this week, where we bring you no BS and no political bias. So take your time, pause from the fearful headlines, and allow yourself to relax. Again, I'm not trying to sugarcoat the stock market. There have been some rough days. However, there's a lot more control that we have that the news isn't telling you, that people are telling you to be afraid, to panic, because let's be honest, things aren't as bad as they seem. Yes, it's difficult and it's frustrating to see your 401k and your IRA go down, especially for those who need that now or will need it in the near future. However, history shows us that the stock market will recover. Your 401k, your IRA will recover. If we come to some sort of economic crisis, businesses are closing, where unemployment is sky high, then yes, this is a little bit of a more difficult conversation. However, right now, we have some tariffs, which are taxes on the United States and other countries, and this is causing investors to be afraid, to worry about the economy and the future of the economy. It's okay to think about where's this going, what's going to happen, but try not to be too fearful and allow yourself to evaluate this situation and see what you can do in the future. Thanks for watching. At Freedom Finances, we have a lot of stuff for you. On our social media channels, we have daily finance news and daily finance tips. On our website, we have so many resources, including news, career news, budgets, debt calculators, and a lot more to help you build your personal financial freedom and financial literacy. If you want to follow along to build yourself up and build your finances for yourself and your family up, please follow us at freedomfinances.org or any of the social media platforms that you prefer. Thanks for watching. Have an amazing day.